Are the short-term charts turning bullish? What are the macro charts looking like? And are we still on track for a 2024 bull run? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you all have a fantastic day today. In today's video, we're going to be going over the short-term price action, the weekly and macro charts, and of course, even discussing the 2024 potential bull run and 4-year cycle. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the third link down below. You get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with the major Bitcoin moves, economic data, and everything in between. If you're interested in our trading channel, you can join our VIP group. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, and of course, exclusive analysis. We have taken numerous trades this month. Every single trade has hit our targets. Of course, 100% win rate so far. Fantastic stuff to see. If you are interested in joining this, you'll not only get access to our main VIP group with over 640 members, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news chat, our trade setup chat, our help chat, and our video chat. All information can be found in regards to how to join and our track record in the pinned comment in the free channel. Go ahead and check it out. Let's dive into the video, starting on the market data. How are we looking for today? Volume is sitting, let's take a whole refresh of this really quickly. Volume is sitting at 48 billion, down 2.4% in the last 24 hours. Liquidations are sitting at 57 million, sitting pretty steady, quite even for the last 24 hours. Looking at September, we are currently about 8 days into the month, down 0.75% on that month-to-month return. Moving on to our volatility index, we can see the 60-day volatility index is slowly progressing toward the downside, and the 30-day volatility index has taken a little bit of a spike in recent days, moving sideways, again indicative of volatility has fallen back down. Volatility is starting to plateau, and it is dropping once more. Moving over to liquidations, with 57 million in liquidations, the vast majority of those liquidations came from short positions as Bitcoin saw, once again, another move toward the upside, actually breaking out of this short-term downtrending resistance line we had developed on the charts, retesting that upper level of resistance at 26.3K. We are now challenging that upper range resistance once more, as you can see on the current chart. It does look, as of right now, we have created a nice little top over here, rejected from that, grabbed topside liquidity, and we have retraced a little bit. The big question in today's video is, where is the next move going? Is Bitcoin going to continue this rejection toward the downside, potentially retesting this lower range, or will we actually retrace back up, find strength, and push forward? We'll discuss that in the video today. Moving on from there, let's go ahead and take a look, guys, at the DXY. The DXY has bounced quite aggressively in the last 24 hours, actually pushing up to our level of resistance, the 105 to 106 level, our key major area of resistance. This, of course, is going to be the yearly long resistance level on the DXY chart. A break toward the upside of this will be incredibly bullish for the DXY, and thus bearish for the stock market, bearish for cryptocurrency, bearish for risk assets in general. If we reject from over here, that could provide some much needed and temporary relief for the cryptocurrency space and for the stock market if we come all the way back down. Again, if we do want to flip into this bullish territory for risk assets and this bearish territory for the DXY, we will need to break below this downtrending dollar trend line and get into this lower range over here. Until then, we are in an overall uptrend. If the uptrend does continue, we can expect to continue upwards. I will actually also point out we are in a rising channel formation. So again, this is a bearish structure. The peak of the rising channel is actually targeting within this range here. So expecting a short-term rejection from this point is actually not too far-fetched. And if we do see a rejection, that could lead into some short-term relief for our risk asset markets. So we'll go ahead and discuss that later on. Moving on from there, we are taking a look at the S&P 500. The S&P 500 has rejected excuse me, has rejected from this range over here, creating a lower high from our recent high point. Of course, that is still targeting a correction towards 4,300, which is going to be this VRPV gap over here, all the way down to this uptrending diagonal trend line. We have the triple confluence between our local high points over here as our supports. We have our VRPV gap, and of course, we have our uptrending diagonal trend line of the rising channel formation, which is going to mark that triple point of confluence, a major area of support, and a major area in which we do want to be seeing for a healthy retest. Moving on, the Dow Jones has actually retested and bounced actually from this rising uptrending diagonal trend line. We said in yesterday's video, if we do lose this level, that will cause a continuation lower. We have actually opened up much higher, bouncing from this key dynamic support level. Again, everything remains intact. If we do lose this level, we can expect a continuation downwards. If we do bounce from this level, that could be relatively bullish, provided the DXY does move toward the downside. Let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. And to start off with, we are going to be discussing the 4-year cycle and the next bull run. We're also going to be talking about the limitations of the 4-year cycle, and more importantly, discussing, I guess, things that can occur that will prevent the 4-year cycle playing out, which will mean a delayed bull run, or things that will occur that would actually fully eradicate the 4-year cycle pattern and then delete this entire 10 years of historical data that we've been going off moving forward. So first and foremost, what is the 4-year cycle? The 4-year cycle, put very simply, is essentially a macro date range trend between tops, bottoms, and then our next bull run phases. That is all it is. As you can see, the red zones are our bear markets, the gray zones are these consolidation phases, and the green zones are our bull runs. If we take a date range analysis from the top of the bull runs to the start of the bear runs, we take a date range analysis from the bear markets to the consolidation phases, and then we take a date range analysis from the consolidation phases to the bull runs, we can see, according to the date range trend, the average bear market cycle, the average bear market cycle generally lasts around about 12 to 13 bars. We can see 12 to 13 bars. If we take a look at the average bull run, they generally last around 19, to 18 bars. So applying that forward, we'll discuss that in a second. And then our average consolidation phase generally lasts around 16 to 17 bars. So this date range analysis that we've just gone over is essentially the 4-year cycle. The 4-year cycle also suggests once we create that bottom point, that absolute low point of the bear run after the 12 to 13 bar period, that low is never lost again according to the 4-year cycle. So that is what the 4-year cycle is saying. So straight away, to invalidate the 4-year cycle according to our date range trend, we have to do two things. We have to lose the low point of this price here, which is 15,500, or we have to actually not break upwards, and we'll talk about this in a second, when we enter the March 2024 bull run phase. We need to continue in a downtrend. We need to eradicate that common, I guess, what's the word for it? Method that we have seen play out over and over and over again in the last cycles, which is when we enter that bull run phase, we see a significant shift in volatility and volume and momentum that actually facilitates a bull run over the next 18 to 19 bars, which is going to be months. So when we take a look at the 4-year cycle, we can say one thing. According to the current date range, we are expecting a bull run to start around about April 2024 and end around October 2025. That is, according to the 4-year cycle, the expected range of the next bull run. So what will it take for the bull run to actually start? If we take a look at our structural levels now, we are taking a look at two things: the horizontal red lines and the horizontal dotted lines. These represent two things. The horizontal red line represents the base of support that we developed within the bear market, okay? The base of support we developed within the bear market. This actually also acts as a trigger point for a monthly reversal when we break back above it at some point. And number two, the dotted trend line, which is going to represent the high of the dead cat bounce after the initial bull run top. So we get the bull run top, we come down, we dead cat bounce, we retest, and we reject lower. Okay, we see it over here, we come back, we bounce upwards, we reject lower, we see it over here, we come down, we bounce, we reject lower. So those are the two key levels. If we take a look at the macro price action, we can say if we break above the horizontal line, that is when we enter a macro uptrend. If we continue that macro uptrend to break above the dashed or the dotted trend line, that is when we enter that high time frame bull market. The reason being is if we take a date range analysis, which we have done, and then apply a trend angle analysis, we can see the trend angle from the dotted trend line in comparison to the low towards that dotted trend line significantly increases. We can see the trend angle increases from 35 to 40% all the way up to 60 to 70%. This is signifying an increase in volatility, an increase in volume, and an increase in momentum, something we would traditionally see on a mass scale when we enter a bull run. So what does a dotted trend line tell us? It tells us when we break above that dotted trend line, that is when we are expected to see a shift in momentum, volatility, and velocity to the point of which we could actually facilitate a macro continuation upwards, otherwise a bull market. So that would hypothetically occur only after we have triggered past April 2024. If we take a look at the price times, this occurred after we entered that bull run phase. This occurred just after we entered that bull run phase. But it is essential that we do break above this horizontal solid line prior to that bull run phase, because if we do not, that could potentially delay the breakout of this dash trend line, which could either lead to a shorter bull run or a delayed bull run. These are two things we're considering. Finally, what would it take to break the 4-year cycle in the bull run? If we start to see interest rates rise back up again because of inflation, we could definitely see the price retrace all the way down, lose this low, and that would invalidate the 4-year cycle. However, even if the 4-year cycle is invalidated and we delete the 4-year cycle, the key horizontal trigger points on the monthly scale still remain valid. So that key level of resistance over here will still remain intact. That key dotted trend line will still remain intact. So although the date may change, when these levels do break, we would still expect the same reaction, but at the time frame would have changed, thus the 4-year cycle will be eradicated. So we're definitely watching out for that stuff, guys, moving on the macro charts. Let's go ahead and take a look at Bitcoin now on the weekly and daily charts. If we take a look at this chart over here, we can see the 3-day chart. This represents Bitcoin is in a overall downtrend. Moving down over here, we can see Bitcoin has been in a overall downtrend ever since we retested and rejected from that key level of resistance at 32,000. We created that false high, that strong liquidity grab. We've been in a daily downtrend ever since. The daily downtrend transitioned into a weekly downtrend where 28K was lost, and we've been in a weekly downtrend ever since we lost 28K. The weekly downtrend is expected to continue while we remain underneath the weekly downtrending resistance. And this is going to be this diagonal trend line of the arrow pointing down. This is going to be the level of resistance that is keeping Bitcoin in a weekly downtrend. We can also see the RSI is signifying momentum has been falling, which again is indicative of a downtrend. If we want to see this flip, we need to see two things: the momentum break above this downtrending trend line and the price action break above this downtrending trend line. That will signify a flip in the weekly trend and will flip the weekly charts back bullish, which could facilitate a continuation upwards. Until that occurs, the weekly charts are pointing toward the downside, and everything, we'll go in a second, is looking relatively bearish. The one saving grace is that we have a major area of support at 25.2 to 24.4, represented by this massive green box. This green box is a 400 plus day long support level, which is absolutely crucial to be held for Bitcoin if we want to keep the price in a monthly position of strength. If this level is lost, we enter a monthly downtrend. If we lose 24.4, we enter a monthly downtrend. It will validate a breakdown of the last 5 or 6 months of price action above this level of support to show you in a more clear image. If we go ahead and draw that same level in here, we can see just how significant that level is. We had massive resistance under, we had massive support above. If we lose this major support becomes major resistance, and we continue toward the downside. So an incredibly significant level to be watching and for the bulls to defend. And that is why we've seen such crazy price action, right, in the last few weeks at this level, because the closer we get to a key level that has the ability to direct the macro price action, the more indecisive and the more defended this level will become, and thus the price action will more likely just push it sideways. We saw the same thing happen at 32K, okay? 32K was a major bullish trigger. We saw sideways price action, we saw indecision, we saw a lot of wicks, and then we broke downwards. We're seeing the same thing happen over here, but 24.4K to 25.2K is the equivalent of 32K. It is a major bearish trigger. If we lose this level, we continue downwards, but until then, we're going to see major indecision, a lot of liquidity grabs, a lot of manipulation, a lot of sideways price action at this level. Moving on from there, guys, if we take a look at our structural analysis, we can say a break above 32,000, which is absolutely required, will send the prices higher. We are expecting, if the prices break above 32,000, we are ultimately expecting a move back to 48K, which is going to be, again, that dash trend line according to the macro charts. But for us to even do that, we need to clear a lot of these short-term ranges. 32K is still going to be the trigger point for the macro bullish trend. Breaking above 32K sends us into a macro bullish trend. Until then, the trend is our friend until it ends, and the trend is very relevant. Okay, we can't ignore it. We are in a weekly downtrend, have an inverted head and shoulder pattern. If we take the neckline to the top of the head and shoulder, apply that to the breakdown point, that is suggesting we could go as low as 19,000. 19,000 will not be a target until 24.4K is lost. If 24.4K is lost, then 19,000 would be a target. Again, if we break above this downtrending resistance level with the arrow on it, before we break 24.4K, Bitcoin will be in the clear. It is really a battle between these two levels. Are we going to break 24.4K first, or are we going to flip momentum positive, break the weekly downtrend, and push back upwards, defending this level of support again? That's the big question. We have to wait and see. Let's go ahead and move over to short-term charts and then finish up on some technicals and wrap up the video. So short-term, we have gone ahead and retested this range high once more. We saw a breakout of our downtrending diagonal resistance on a short term. We saw a break over the POC level. We said in yesterday's video, if we break over 26,000, that will send us short-term bullish. Short-term bullish will result in a move to 26,300, which we now have actually seen play out. Now, we do expect to see a rejection from this level on the short term because, number one, resistance is resistance until it is not, okay? We have to be aware. The resistance is resistance until it is not. So already the probabilities of a rejection at this level are higher than the probabilities of a breakout while we remain underneath that level of resistance when we're talking about this price action from a purely a probability point of view. If we take a look at our technicals, what are we seeing? Well, we're seeing a bearish divergence on the 5-minute chart. This bearish divergence has already played out as we have seen a break toward the downside. The big question is, will this momentum continue lower? And for the momentum to continue lower, we will need to break below this 50 EMA to signify a shift in strength. So right now, we have seen the breakdown, initial breakdown according to our shift in momentum has occurred. For a continuation lower, we do want to see a loss of this 50 EMA to fill this gap in the VRPV to take us back to $26,000. We can see the CVD has fallen off and is dropping, which is signifying bulls are losing control at this level. And of course, the RSI is continuing to fall. On the 5-minute chart, it is not looking too strong, but again, the bulls still do have a chance to reclaim strength and push the prices upper. However, the probabilities are in favor of a rejection. If we do see a rejection, obviously that main first target is going to be 26,000, which is represented by that POC level. If the POC is retested, we could see a bounce and continuation upwards. However, if the POC is lost, we then enter that short-term bearish trend back down to 25.6K. So right now in the short term, I think a lot of bulls are getting overly excited at this level. They've jumped in, oh, we're going up, but they haven't really zoomed out and had a look at the bigger picture. This move upwards, although was cool, although it was great to capitalize on, is insignificant. It's completely and utterly insignificant. It did not change anything. All it has done is it resulted in a move to retest the range high resistance within the same area of 21 days of price action we've been within for the last, nearly whole month. So it hasn't done anything, hasn't resulted in anything significant. I would like to see a break above 26.3K and close above that level to actually see anything significant. And so far, if you did take shorts at this level like we did in VIP, we've already made 50%, we've already made 26% on that short plus on that rejection point. So it's been a good, nice little opportunity to capitalize on these people jumping into late longs and short that market. I'm going to leave the video there, guys. I think that is about all I want to cover. There's a few things I want to talk about on this macro chart over here, but again, I'll refer you to yesterday's video. We discussed all of this, the Gaussian channel, the 50 EMA, the bull market support band. Everything is suggesting we do have macro weakness right now. We have weekly weakness, and for the price to really start to regain strength, as we said, we need to break above this downtrending diagonal resistance. But I'll leave you with this one thing. This downtrending diagonal resistance confluence point is 28K. If we take a look at that weekly chart, look where 28K is. 28K will signify a break above the bull market support band, a break above the 50 EMA, and a break above the Gaussian channel upper band. So 28K will not only shift it from a structural perspective into a weekly bullish trend, but from a weekly perspective, from a technical perspective, it would also invalidate, the developing weakness we have on these charts and flip the charts bullish again. Thanks for watching. Thanks for tuning in. I hope you have an excellent day, guys. Go ahead and check out our second YouTube channel, actually. Our second YouTube channel, I'm going to go ahead and try to find a link really quickly. It's in the free channel. You can find the link over here. Our second YouTube channel, MegaWhale Alts. We're going to start doing altcoin videos every now and again, just randomly posted, once we hit 500 subscribers. So go ahead and check that out. Hit it to 500 subs and we'll start posting. Thanks for watching, and I'll catch you guys in the next one. Cheers.